You probably heard the promise. No tax on Social Security. It made the headlines, it made the speeches, and right now, millions of seniors believe their Social Security checks are finally, completely tax-free. So let me save you from a very nasty surprise next tax season. That is not what happened. Your Social Security can still be taxed the exact same way it was before, but something else did pass, and it is real money. A brand new $6,000 deduction just for seniors. The problem is the fine print, the part nobody is putting in a headline. Because the IRS will quietly deny this $6,000 to a whole lot of people who are absolutely certain that they qualify. So today, I'm going to do 3 things. Show you what actually passed, show you exactly who gets the money, and walk you through the 4 ways you can lose it. Every number is on the screen with its source, and every link is below. And before you decide this one isn't for you, stay with me because it cuts both ways. If money is tight, this deduction could wipe out your federal tax bill entirely, and you need to make sure you actually claim it. And if you are comfortable, you've got some savings, maybe some investment income, then you are exactly the person the IRS is most likely to quietly disqualify. And you won't even know it happened until the bill comes. Both of you need the next 10 minutes. Here is why nobody explains the fine print. No tax on Social Security is a fantastic headline. It wins elections. A $6,000 deduction that phases out based on your modified adjusted gross income and sunsets in 2028, that does not fit on a bumper sticker. Nobody gets famous explaining the catch. But the catch is exactly where your money quietly disappears. So that is the part I am going to focus on. Quick, honest word about who is talking. My name is Andrew. I am not your accountant, and I am not going to pretend to be. I am the guy who reads the actual IRS pages and the actual law so you don't have to. You do not have to take my word for any of this. Every figure I give you is straight off a government website, it is on your screen, and the links are in the description. Trust the source, not me. And if having someone cut through the political noise and just tell you the truth about your money sounds useful, do me a quick favor and hit subscribe. That is the entire job of this channel. Now in the next few minutes, the truth about the Social Security tax promise, and then the 4 ways the IRS denies you the $6,000. Stay to the very end, because the 4th one is the trap that catches the people who are most sure they qualify. So let's start with the big one. The promise was no tax on Social Security. Here is the truth in 1 sentence. Social Security is taxed in 2026 exactly the way it was taxed before. Nothing about that changed. Depending on your total income, up to 85% of your Social Security benefit can still be counted as taxable income. That rule did not go away. It is still on the books. What was sold to you as no tax on Social Security was actually this: the $6,000 deduction we are about to break down. It can lower your overall taxable income, and for some seniors, that does mean less tax. But let me be crystal clear, because the IRS itself says this in plain words. This deduction does not make your Social Security tax-free. If you stop your withholding because you think your check is now untaxed, you could walk straight into a tax bill in April. Okay, so here is what you actually got. And it is worth real money, so pay attention. Starting with your 2025 taxes and running through 2028, every senior age 65 and older gets a brand new $6,000 deduction. If you are married and you are both 65, that is $12,000. And here's the best part. This stacks. It is on top of your regular standard deduction and on top of the extra standard deductions seniors already get. You do not have to itemize to claim it. Take the standard deduction and you still get this. For a lot of retirees, that is the difference between owing the IRS and owing nothing. So that is the good news. Now here is the part the headlines skip. The 4 ways the IRS will deny you or quietly shrink that $6,000. Get a pen. Denial number 1, age. You have to be 65 or older by the last day of the tax year. Sounds obvious, but here is where people get burned. If you are married and only one of you has turned 65, you only get one $6,000 deduction, not 12. The spouse who is 64 gets nothing this year. So if you are both close to 65, the timing of your birthdays can literally be worth $6,000. Denial number 2. And this is the big one, so listen closely. Your income. This deduction starts shrinking the moment your modified adjusted gross income goes over $75,000 if you are single, or $150,000 for a married couple. For every dollar above that line, you lose 6 cents of the deduction, and it disappears completely at $175,000 single or $250,000 married. Here is the trap. A lot of comfortable retirees cross that line by accident. You do a Roth conversion. You take a large required minimum distribution. You sell some stock or a piece of property. Any one of those can push your income over the line and quietly erase part or all of your $6,000, and you would never see it coming. Denial number 3, the paperwork rules. To claim this, you need a valid Social Security number, and if you are married, in most cases, you have to file a joint return to get it. File separately, and you can lose it. These sound like small details, but they are exactly the kind of thing that gets a deduction kicked back. The rules are specific, and the IRS follows them to the letter. And denial number 4, the one that catches the people who are most sure they are fine. This deduction is temporary, and it is not automatic. It only exists for tax years 2025 through 2028. After that, unless Congress acts again, it is gone. And nobody at the IRS is going to call you up and apply it for you. You, or whoever does your taxes, have to actually claim it on your return every single year it exists. The seniors who lose this $6,000 the most often are not the ones who don't qualify. They're the ones who do qualify and simply never claim it. So who is the big winner here? It is the middle income retiree. If you are 65 or older and your income is under those thresholds, 75,000 single, 150,000 married, this is about as close to free money as the tax code ever gets. And claiming it is straightforward. It comes off your income whether you take the standard deduction or you itemize. So when you file, or when your tax software or your preparer files for you, just make sure the senior deduction is actually on the return. If your situation is genuinely complicated, a business, rental property, a big one-time sale, it is worth one sit down with a real tax professional to make sure that phase out doesn't catch you. But for most people, it is simply a box that needs to be checked. So let's put the whole thing together, because once you see it clearly, you will never be fooled by that headline again. Social Security is not tax-free. That part was never true. The $6,000 deduction is real. That part is. But it is not automatic. It is not forever, and it is not for everyone. It rewards the senior who knows the rules, and it quietly passes by the one who assumed somebody else was handling it. And that is really the whole lesson, isn't it? The headline is written to make you feel something. The fine print is where the money actually lives. Nobody is going to hand you this $6,000, but nobody can take it from you either, as long as you know the rules and you claim what is yours. You do not need a fancy advisor to do that. You just need to know that it is there. And now you do. So before you go, do 3 quick things for me. First, hit that subscribe button. This whole channel exists to do exactly this. Take the big political promises aimed at seniors and tell you the plain, sourced truth about what they really mean for your money. Subscribing is what tells YouTube to bring you the next one. Second, tap that like button. It is the single biggest thing that pushes this video to another senior who is about to stop their withholding because they think their Social Security is now tax-free. And third, send this to one person over 65, a parent, a neighbor, a friend from church. You might be the reason they claim $6,000 they didn't know they had, or the reason they don't get a shock in April. I'm Andrew, stay sharp out there, and I will see you in the next one.